Good evening, everybody. It's Jeff Scott here, and welcome to this week's top-down HGS investing weekend review. Thanks for joining us. As you can see at the screen here, that's the view outside my window in my condo in New York City, and let's go ahead and start the presentation. Well, I guess the Mayans were sort of wrong. We're still here to talk today. I guess 10 days or so after they predicted the end of the world, or their calendar ended. But they're probably laughing in their graves as they watch what's going on here with the fiscal cliff. So maybe it was a foretelling of what to expect. But it'll be interesting to see. Educational purposes only. Anything that I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker, and I'm not affiliated with any software vendor or trading company. The tools that I demonstrate are those that I use in my daily trading, and I paid for everything that I use, so I hope that means I have less bias, although clearly you'll understand that I do have a lot of bias of what I like to use and what I don't like to use. Yeah, I like this view because it stretches out my head and makes me look thinner than I am. Basically, I'll be doing a live webinar on Tuesday night, Tuesday being New Year's Eve, from 8 to 9:30 p.m. And I'll do similar to this, a little bit longer. I'll take Q&A, look at stocks that people put in there. And here's the information for signing up. All you got to do is pause and write down the link. But the key things are 529-767-698, which is the meeting number if you end up at gotomeeting.com. You need to pre-register only so that we can send you out the link as we get closer, and it's not a sales presentation by any means. So, this will be interesting to me to go through what I think is going on in the market right now, but to be honest, it's a little bit before 5 p.m. Futures have not opened yet, sort of. I'll explain the sort of in a few minutes. And who knows what will happen tomorrow? I have no idea. I mean, clearly, to me, it's going to have a lot to do with what happens with the fiscal cliff, which, frankly, I think has taken on proportions like Godzilla versus the Thing, where they're much bigger than life, and probably, whether or not a deal gets done on Monday or 3 weeks from Monday probably doesn't mean a whole lot, but the way that TV, CNBC, et cetera, has elevated the drama, it's obviously a big deal. So deal or no deal, expect continued news-driven volatility. I saw something come across one of my screens earlier today that they were having problems with the discussions on the Hill today. What a shocker. Now, what isn't, I think, as easy a thing to ignore is the debt ceiling. And you probably also read that we're up against the ceiling as well. There's some modest things the Fed can do to delay us hitting the savings. But, gee, I think that's a bigger problem. Where's the compromise? I mean, I don't know about you all, and I try not to make these political, but I'm getting a little tired of having a Washington where you have a right and a left, and they forgot that there is something that's working together. And frankly, as much as I'd like to not pay more taxes, I don't think it can be handled without more taxes and less spending. But that will take a lot of compromise. And clearly what happens will have widespread impact on your portfolios. The dollar seemed to get stronger and weaker based upon the news. As I think about it, if there's not concomitant spending cuts, there's going to have to be printing of more dollars. Ultimately, it's going to have to cause dollar weakness, and dollar weakness will cause inflation. Markets up or down, gosh, depends which way the wind is blowing at a given time. If we get a mini deal through the end of the day on Monday, my guess is you'll see a great shorting opportunity as you'll get a emotional run-up, and then people will realize that we have bigger problems and the market will come right back down. So I actually personally am thinking, unless we get a surprising big deal where there's spending cuts, thinking about shorting a rally that we get on Monday if we get one. Sector rotation, I mentioned a few weeks ago that the China stories seem to get a little bit better. of late, and that helped for a while. Steel, ore, and coal, they've slowed down a little bit. Financials have been leading. We've got Elizabeth Warren now in Congress, and she's not a friend of the banks, and of course she's on the Finance or Banking Committee, so that may affect the financials, which have been doing well. So you might expect to see sector rotation. Will international markets lead? If that's the case, will stocks with multinational exposures do well? That might be something to think about. As I look at what's happened over the last several quarters, or trading days, it's clearly been a junk off the bottom type of a thing, where it looks to me like a lot of the leaders have been trashed because people are selling them to avoid higher taxes, and where typically we sell the laggards, maybe the leaders got sold, and that might affect what happens coming this week. And ultimately, will international markets start to lead, and will we start to see emerging growth be the story? And I think if we listen to the news, we start to hear things like the worst is over in Europe. Some of the Greek banks got upgraded, so it may be that more and more of the negative attention will be coming here. So I don't think everything will be decided and fixed come Monday. I think there's lots of overwhelming issues, and I think the debt ceiling is important and will become increasingly noticed over the next couple of weeks. So enough of politics. Look forward to seeing you Tuesday. I use a lot of tools. Some of them you're going to see tonight. I need a real-time trading platform. I need it to scan real-time, and I need charting real-time. I need a place to do my trades. I need something to analyze the market. I use High Growth Stock Investor from highgrowthstock.com. I'll use that tonight. Probably not going to spend much time on the other two bullets, but I will plan on doing that on Tuesday, both using Magenta Trader for seasonals as well as the Edge Raider family. And then I've learned a lot of what I've learned from Ian Woodward and Ron Brown of Woodward and Brown Investing, and they have a number of tools and things that you might find useful in your trading adventures. I've actually been involved in creating an indicator, but for the most part, like most of you, I started as an individual investor and learned on the run. I've done a lot of classes, but mostly I've read from some of the leaders. Some of them are here. Here's Ian and Ron, who I've mentioned, William O'Neill, the editor and owner of Investors Business Daily, Morales Catcher, the Pocket Pivot Boys, Dan Tharp, who's sort of a leader when it comes to position sizing, money management, Pascal Willen, effective volume, trading the big money. Bigelow is my candlestick guru, and then Grunke's taught me a lot about how to make money off my investments from the perspective of premium on calls and puts. If I say some things are interesting, and I might, quote, put them on my buy list, all that means is at 5 o'clock on Sunday evening, before I know what the futures are doing, what the market is doing, that these are interesting. So I'll try and take the 8,000 stocks in the market and pull them down to a manageable number that I'll watch. I'll put some in my automated tradings. Others I'll scan during the day for changes. And you'll see what I do as we go forward. But just because I call something I'm putting it on my buy list does not mean I'm buying it at the open on Monday. Gosh, the volatility is interesting here, so I wouldn't know what to do anyway. So I think one thing you can be certain, we'll probably see some more volatility as these things sort themselves out. Tonight, I will do as much of this as I can. I will skip how I get to some of these results and just show you the results. But when we do our Tuesday live talk, I may go as long as 2 hours. And as always, they're archived and recorded, so those can go back and see what I do. But I really spend my time looking at the market and top-down approach. And that's what I plan on spending tonight. I'll look at a couple of the shortcuts of finding some of the stocks I'm interested in. And tonight probably won't be much integration of other programs outside of maybe the first couple there. I mentioned Ian and Ron. These are the secret weapons of HGSI. And really continue to help in my learning. And I believe that you need to invest in yourself, and learning is important. And although this is a advertisement for their October 2012 seminar, they have a seminar in March in Southern California. I know many of you may be attending Greg Mills's program as well. They overlap on Saturday, but I know that I will be going to both programs. If you want to find more about HGSI, here is their website, highgrowthstock.com. It's one of the unique things is you can get a free trial without even giving a credit card, which I think can be quite useful if you want to start to look at the program. Ron put out a free weekly report this week here. You can also just access it up here under reports from the website. And as I mentioned, free software and data. And then Ian has a blog which is also free. Just again, quick reminder, if you like these programs and would like to participate live, there'll be one on New Year's Day, night of New Year's Day, January 1st at 8 to 9:30, and it will be archived and placed in multiple areas. Okay, on that note, let's take a look at some things in the market. So first thing is, how did I do? How did we do last week? I always like to understand, what the market's been doing, and also get an idea of are some things working and others not. So first thing is, it wasn't a fun week for me, and I'm sure it wasn't a fun week for you, as the market was obviously challenged with the fiscal cliff, the news-driven, and probably setting up for more of the same, at least as we go into the beginning of this week. So one of the things that I like to do is called group performance analysis, where I have a number of different watch lists that are listed here. And frankly, they're broken out down here as well as what stocks were in them. And I put these lists together on Saturday and Sunday, and I draw the stocks that I'm interested in buying from these lists. And then I use a tool in HGSI that allows me to see the performance of the various lists as the week goes on. And I may check it daily. I certainly check it every week. And what I've done here is looked at, if I took these lists, again, I did them on Friday night and Saturday, and based it upon the closing price on Friday of the 21st, and then I based the performance on 1 week, assume I closed them out at the end of the day on Friday the 28th. How did these lists do? So first thing you notice is there's 2 black and a lot of red. So that tells you it was a bad market. So almost all the lists that I looked at, and these were all bullish lists except for ones that are called bears, did poorly. Now the interesting thing is the 2 bears lists here, these assume that I went long these stocks, not that I went short. So the worst stocks I could find, or some of the ones that gave some of those bearish patterns, actually were the only ones that were positive. So that, here's another bearish search right here near the top, and another one, a bearish search. So when I see that, it tells me that, that goes along with the sell the leaders and not the losers, were the ones that had taken the big losses during the year, were not under distribution. And perhaps people are saving them to after the first to sell, because if taxes go up, your losses are worth more as a tax deduction. What else did I learn from this? I learned that the market itself, the S&P 500, somewhere in here, where did I put it? Is right here, was down nearly 2% Friday to Friday. That fits the feeling I had, and we'll look at the various indices later. And then if I look at that, I see that the IBD 50 and the HGS 100 were all within 10 or 12 hundredths of a percent, different than the S&P 500. So what it tells me is that high growth stocks performed in line with the market, and that since I got predominantly high growth stocks in my portfolio, that if I didn't do any money management and I didn't change my portfolio, my positions over the week, that I would have done, I did minus 1.73, which is identical essentially to the S&P 500, which was minus 1.94, a little bit better. Now again, there's a lot of assumptions there. That assumes that there's no money management, it assumes that there's equal weighted positions, it assumes that I don't use any hedging with options, it assumes I didn't buy anything or buy protection as the week went on, and it assumes I didn't sell anything. And every one of those assumptions would be false. But it gives me an idea of the stocks that were sitting across my portfolios on Friday at the market close, how I did compared to the rest of the market with the same things applied. So I did a little bit better or really the same. A couple of other things, I do a number of buy lists in orange. And look and see if anything really outperformed, and none of the buy lists, ones with high earnings, were down as much as the S&P 500, and frankly, all my buy lists performed poorly. So looking at new growth stock picks was not a great thing to do this past week. What else can I tell us from this? You'll notice here in gray are a couple of things that are at the top here. And these are GCL, or green candle lows. And those are some signals to me that might represent stocks that have pulled back and they've had a new low, but that they closed that day with a green candle, which means that even though they set a new low that day, they closed up for the day. And David Elliott and others have talked about green candle lows. New good friend George Lee talks about green candle lows all the time. And you could see the 3 green candle low scans that I did outperform the general market. Red candle highs that are an opposite of that, the Wednesday one, the Sunday, and then the Monday, did at the market or did worse. So you're going to hear me talk more and more over the next couple of weeks about some new scans I'm doing and new things I'm looking at to try and find or fine-tune my ability of picking winners or losers. So if you felt lousy with your portfolio during the week, jump on board because it was a tough week to be long in the market. Now, a lot of times at this point I will go into the web and I will try and take a look at the futures. And it's a little early. The futures don't open at 8. And had I not been watching the market kind of live on Friday at the end of the day, I might look at this and wonder, are these real, or are these weakness here? Dow's 89 points down, S&P minis down 12.6, the NASDAQ minis down 15, and how do I correlate that with the most recent session that showed that the S&P 500 was up 2.75? Well, I'm going to show you that they're both right. And this session occurred after the CNBC session the CNBC session is based on a different change than this. This is based upon what occurred, I think, after the 4 p.m. or the 6 p.m. future session, and I'm probably wrong on that time, ended and represented additional trades. But if you look at from the 4 p.m. finish, the number you saw earlier is the right number. And I think I just messed that up, so let me show you a different way of looking at that. One of the things I like is Genesis Trade Navigator, and I'm not going to go make this a Trade Navigator story. But one of the things I sit during the day, besides being able to watch candlesticks during the day on my various stocks that I'm watching, I like to look at, as you can see here, the E-minis, the YMs, the TFs, and the NQs. And I like to see how they're doing over the day to give an idea of perhaps where the market is going to end up. So I wanted to see if did I lose that? I thought I put in 2 lines here, which I guess I don't see them. So a couple of things is this blue line here, to me, is an important line because this blue line, which is at 1391.50, represents the flush in the market low from about a week ago, now 9 days ago, on the 20th, going into the 21st, when the market ended. And I'm not sure it was Harry Reid or somebody got up and said there wasn't going to be a deal and they were going to go home for Christmas. Now the market did not close that low down as low that day, and in fact the market actually came up quite a bit from there and had a great recovery from the overnight lows even by the time the market opened up at 9:30. Here is where the market closed at 4 p.m. Now the futures continue to trade, and after the market closed in 15-minute increments, you could see right around, actually let me redo that. The market closed here on this candlestick. And I think these quotes are 15 minutes late. I believe the market closed here right around the futures, right around 1400. And then in a matter of minutes, after the market closed and it became more ominous about a deal being reached, this is on Friday, by 4:15, the market had pulled down to 1382, breaking through the low set a week ago, 1391.50. And there was a little backfilling here, but as you could see, when the 5:15 session closed, the market at 1386.75 was down considerably from the close of the day, which was at 1450 cents. Now, so 1386.75 was the end of the 5:15 session, and therefore see if I can get this right, 96 is actually come up some. 1384 here was the current futures, and this was the fair value of the futures. And here was the close at 1402. So you could see a big drop at the end of the market. So as we go into tomorrow, I don't believe that 2.75 is there. That's 2.75 up over 1384, which was the baseline that I'll be looking at. So a pretty steep, harsh sell-off at the end of the day after the market closed on Friday. Does not bid well for the opening, but I think we all know from a news perspective that the only thing that really matters is what happens in the fiscal cliff. And so as you can see, this is the thing that came across early. And, you know, obviously I think you know what this means. If we fall off the cliff, then we're going to see all kinds of interesting cliff analogies over the next couple of days. But I got to tell you, and enough of this, let's go back into the market. Some of this is CNBC trumped up because in healthcare, several years they've not had an answer before the New Year's. They've gone back in 10, 14, 30, 40 days and just retrofitted. All right, so we've already looked at last week of being tough. We've looked at the futures are looking rough going into tomorrow. Let's take a look and see if there's anything to actually like in this market. So you all know I like to go into Woodward and Brown user groups. I like to look at Major Markets Plus. I like the top-down view, which is all technical, but mostly looking at the last week, but looking out as much as 2 or 3 weeks, ranking it by raw combo and telling me where the strength is in the marketplace. So what do I see? I see that the indices are all the weakness. No surprise. Looks like small caps, as demonstrated by the Russell 2000, out, and the small cap 600 outperformed the rest of the market. If we look at one-day performance, and we're going to look at the VIX in a second, volatility was leading. Gasoline had a setback, but you could see all the major indices a little bit less impressive on the small caps. We look at the 5 days, we see a huge run-up in volatility. I gave up on TVIX a long time ago, but I did buy some UVXY early in the week last week. The only things that were up were oil, Treasury bonds, which goes up sort of when the market's getting tanked because of fear. Volatility, extremely high, as you can see here. And for the week, minus 3%, give or take, on the major indices. Now, why do these look different than the numbers that I showed you is I looked Friday to Friday, and these are looking at 5-day returns. Which may be a little bit different. All right, so makes me feel real happy, not really. So let's take a look first at the indices. We'll look at a couple of them, and then we'll look at volatility and the dollar and see if we can make some comments about where we may or may not be heading to. So the S&P 500, so that doesn't look like it's current. I can fix that. There we go. Looked a lot better before. This was the nice run-up that we had from June until middle of September. Big pullback from mid-September until the middle of November. And then, we had a nice recovery. Let's just take a look at this. Run this up from here to here. From the lows, give or take, and I'm not as good as Ron when it comes to drawing these in 22 trading periods are 8% return. And what we had over here was an 8% drop over 43 days. So, but it takes more to make up the loss because you're working off of a smaller number. So we've now pulled back from the peaks, closing at the low of the day on Friday, and dropped about 3%. So if you think about what would our expectation be, my expectation would be that since we did not hold at the 50-day moving average, that the next place to stop is going to be the 200-day, and I expect us to test that out bright and early on Monday morning and see if we can hold, and if not, then obviously there's nothing under here except perhaps support where it fell recently, but that's a more robust drop to keep us from a pretty big fall, and this would be our lows from back in June. So perhaps intermediate short-term target would be right around the 200-day moving average. Probably would be where I'd look to if we can't hold at the 200, be about 1342. And then we've got another 75 that we could potentially expect to drop if we can't hold at those positions of support. So this is going to be a critical place come Monday as we look to see whether or not we can hold at the 200-day moving average. S&P 500, let's take a look at the NASDAQ. Similar type of a pattern. It had a probably more robust pullback, recovery, and is broken below the 200-day moving average. And let's hope it gets up there relatively quickly because we could still drop from 2960-ish to about 2825, which is another 5–6% from here before we get into an area of obvious support. Those moving averages, when they're above you, act as resistance. But when they're below you, they can be nice support, and you have nothing here underneath as support. So everything is turning red here except for accumulation distribution, which is probably lagging. This is Bongos and Force Index. So the NASDAQ also looks weak. Take a look at the Dow. As you can see what happens, you continue to drop. This is utilities. God, I hope the Dow doesn't start to do that. The Dow just breaking below its 200-day moving average, similar to what we saw on the others. And if we look at the Russell 2000, which was the strongest of the week, you can see why. So even though it's in a fairly significant pullback, it's pulled back to about the 17-day moving average, and it's got a fair amount of room before it gets down to the 50 and the 200. So be nice to see some strength here continuing to bounce up. And if we do see a January effect, typically the January effect's led by small caps, and perhaps this is part of it. I like to look at the S&P 1500, which combines the big as the 500, the medium as the 400, and the 600 small. and gives you a single index that is all real companies and of different sizes, gives you a good feel what the market's doing. And you could see, consistent with what we saw in the S&P 500, sitting above the 200-day moving average. That would clearly be the natural place for this to fall to, especially and hopefully bounce if we have a rough opening on Monday. Everything's going to count on news, and you know, news can change 10 times before we get there. I mentioned where the strength was, and that was in volatility. And you know, we have, this is June, and our June highs on the volatility were up about 27.75 there. 27.73 were the high, and it looks like we may make a run for that. You could see just a huge move up with a couple of kahunas, showing the momentum coming into the VIX on Friday. If we look at a weekly VIX, you can see we're sitting right under strong resistance you'd expect on the 200-day. You could see back in June, that's what put the end to that rally there. It'd be interesting to see, because of what's going on in Washington, if we don't get above the 200-day. And you know, I guess one of the fears that I would have is, at what point does this 200-day turn into support on the VIX instead of resistance? Big kahuna on the weekly, right underneath the 200 moving average. And will we go back and test some of the higher levels that we saw back 2 years ago? I think the answer might be a yes, which is why I've purchased a decent position as a hedge for my longs with UVXY. All right, so that's the market. I hope that you're real stimulated there. I mean, it's hard to really say anything and commit to anything without knowing what happens with the fiscal cliff and how that resolves. But I got to tell you, I'm not sitting here watching football, looking at my great view and having a lot of optimism. I'm a little bit nervous as to where we go from here. I like to look from a top-down perspective. So right now, what I'm seeing is I'm not sure how much new money I commit on Monday unless we get some resolution. As I mentioned, I might be interested in shorting. As I said before, I'm less good at shorting than I am good at buying contras, and several of the ETFs that might go up if the market goes down, we'll talk about those later today, showed some life this week, and that might be places where I might look. And I started looking at individual stocks to buy puts on, which is in a market like this, could be an expensive way, but to me is a lower risk way of shorting, where I know the most I can lose is my premium. And I actually made money on a short I put in last week, a little bit of money on PPG, which was a utility that ran up, and I just took a couple bucks off the top on that one. So I like to look at industries to find out where the strength and the weakness is. Now again, the T1 is looking at strength over 1, 2, 3, 4 weeks long periods of time, and it's all technical, and that's great if my interest is what's been going on for the past month. And that might be the case for certain things, but it's not the case for when I want to look at where the money's moving today. But we start with 145 different sectors or industries, and if I go to force up, I can see that all 9 of them are moving positive, and that would mean that there's a lot that are moving down, 90 of them. So if I'm looking to be long and to make money on the long side, these are the places, if I'm a top-down investor, that I might want to be playing with. Now, as we look at these things, some of these have been hammered, okay? In fact, let's look at, let's see if I can do this right. Let's look at percent change weekly. Actually, I'm going to change it. I'm going to look at over the last 8 weeks. In fact, even though these are leaders, if one looks at, for example, over the last 8 weeks, you can see that minus 13%, minus 4%, minus 3%, that half these stocks were actually lost money over the last 8 weeks. So they are not necessarily high flyers that have been super strong. But they are the leaders right now. So semiconductor equipment, Magnachip came up on my bottoms-up review. So let's take a look at a couple of these and see if anything of these look interesting if I wanted to put money to work long. So let me give some explanation about what we're looking at here. And I'll go more into this on my Tuesday night webinar. These are fundamentals. These are ribbons of momentum. So green is good, red is bad. These are pocket pivots up. Candlestick charts with a purple is an 8-day exponential. Green is a 17-day simple. Blue is a 50-day simple. Red is a 200-day simple. Down here we have volume in both windows, but we have a number of other indicators in here as well, kahunas, and then phoenixes and eurekas. I will mention them when they're meaningful. A red kahuna here not sure what I make of that. So here's BCD semiconductor manufacturing. You can see my momentum indicators have turned green. A huge volume day. Had a big run up here on Thursday, pullback on Friday. Don't know anything that happened here. That looks like what you see when something is being bought. Don't know this company from Adam. And Dio jumps on deal to buy BCD. So this one, all I did was right-click, more info from web, and went to FinViz. So it looks like BCD is an acquisition candidate. That probably explains why it's at the top of the list and probably explains why semiconductors are there. Magnachip, semiconductor, great earnings per share growth, and that kind of excites me. The chart's very loose, although it's on its way up. And actually, this made it to one of the lists that I was interested in watching. Pull back, is it going again? All the things here are green. I'm mesmerized by its earnings per share growth, and one I'm going to watch. If I remember correctly, let's see, take a look at the volume. I don't like the volume. It's not a very liquid stock. And trades at a very low multiple, even though it's got a high growth rate, so it requires a little bit of work for me to understand that. I guess it's what we call a turnaround stock, where it had stubbed its toes on its earnings are going up. Some great leaders start this way. Bears watching, not worth buying it. IPG, or P-Labs rather, Photolab, pulled back, struggling to get above the 200-day moving average, had a pocket pivot on Thursday at Doji on Friday. No earnings per share growth, cheap stock. I have a feeling that the reason why this group was up is because of the force index was so high on BCD. And for those that are scratching their heads and going, what is he talking about, force index? Force index is volume today times the close today minus the close yesterday. And what's important about it, or how it stands out from my perspective, is it can be driven by a big gain or loss in the stock from a direction perspective, but the number very much is tied to volume. And so things that have large volume will drive the force index. And when you look at BCD, I bet we're going to see that its volume was crazy big. And let's see if I can find You know, I have to take a look at it again. Its volume on was 600. Is that it? No, that's yes. Let's go back one day. 3.8 million on Thursday, and its average volume is nothing. I mean, look at this volume, 50, 60, 80,000. So that explains why its force was so high, and that brought the group up. Go back, so that wasn't exciting. Fertilizers, agricultural chemical index, changed to index groups. So I've been a big fertilizer fan, and I wasn't certain that this was the time of year that fertilizer stocks run. In fact, let's just take a quick look at this. I said I wasn't going to do this, but I did it anyways. So Magenta Trader is my favorite seasonal analysis tool, and I use this to learn, you know, both to scan for strength and weakness based upon seasonals. But I'm curious about the index here, or about this type of stock. So let's look at CF Industries, which is one of the leaders here. And what this tells me here is that this is a very seasonally strong time. So here's CF. Now, this yellow line represents the predicted movement in price based upon the past 5 and 10 years. This represents the actual price, and you know, there's been some correlation, but not perfect. But it tells me, and let's look at the data window, that going forward over the next 5 days, one would expect it to be up 3.5%, up to the next 10 days, 4.65%. And you could see the high and low over the last several years. Over the last 9 years, I guess there's only 9 years of data here, so it's 9 years, not 10 years. It was up 8 out of 9 times for the next 10 days. It's up 7 out of 9 times for the next 10 days after that, or 2 weeks after that. So if you look at it, we're in a very seasonally strong time. In fact, if we make the window, say, 40 days, you could see that 8 out of 9 years and a 20% return. So that tells me fertilizers are strong. I don't know Youngie International. That is, I bet, a Chinese fertilizer company. And let's see if there's something to like here. And then I'm going to do an audible and look at some of the others to see if they look good. So a lot of volume came into the stock on a huge up day on Friday. It had been pulling back. Kahuna, things are turning green. I want to know, was this another acquisition candidate, or did something happen with Youngie? So I see downgrades. Well, that's not recent. Loans from State Bank. Well, all right, so I see nothing here that I like. So Youngie sounds to me that was more of a financial story than a reality story. So let's just, out of curiosity, let's go in here and let's take a look at some of the other fertilizer stocks. CF is one that I've owned for a long time. Certainly is pulling back. It might be in a place that gets attractive if it bounces off the 200. I don't like the earnings per share growth. Potash, a little bit different stock below the 200. That doesn't look too exciting. TNH, is that still around? Kind of flatlining below there. Agrium, pull back, everything down. And there's, let's see, is this Vanguard? No, AVD. American Vanguard has pulled back. It's got earnings per share growth. Well, it's a nice sector, but I got to tell you, I don't see anything here that makes me want to jump up and down and say, that's the one I'm going to buy. So good news is, from a sector perspective, it's supposed to do well. Bad news is I don't see one I want to look at. Change to index group, see if there's anything else there that I didn't think of. All right, so this is interesting. Let's not forget it. I was thinking of the ethanol and refiner story. Here's Mosaic, maybe the best looking of the bunch, but not that attractive. It's got a lot of green momentum indicators. It makes money, although its earnings growth have been up and down. And it's pulled back to the 17-day. If the markets rally, if we get a little bit of a run here because we reach a deal and you want to buy a seasonally strong stock, Mosaic might be one that you might want to look at. But I'd look to see certain things happen. I'd like to see it take out perhaps this day. I'd like to see a kahuna, a pocket pivot, a green candle low, something that tells me that we might be seeing a momentum shift. All right, back here. Home improvement retail, well, Home Depot's been a leader. Title Shop Holdings, and it sort of looks like an IPO. Doesn't have much numbers or make money. I don't like trading IPOs. Lumber Liquidators is one that I've been in and out of. It certainly has pulled back here. It's below the 50, which is not real happy to see. Makes money, trades at a multiple of 35, grows a little bit bigger than that. Certainly something that might, again, if we get wind behind our back and the market takes off, and especially if we continue to see any kind of a boom in home building, you might see Lumber Liquidators go up. Not too exciting from a top-down investing perspective. Footwear, Deckers had a good week. I know Crocs didn't look that exciting. Let's see if Deckers shows anything. So what I'm basically doing is top-down investing is I am going through some of the leading industries in what we know is a tough market, trying to see if we can find anything that looks exciting. So yeah, Deckers had a pocket pivot on Thursday, didn't do much on Friday, had kahunas and big volume coming in on Thursday. Let's see what kind of news it had to drive that. I mean, I love the fact I can jump to the news so easy. Short covering, well, UGGs are doing well and they're short covering. Still below the 200-day moving average. I'm less happy about pocket pivots in a stock that's in a downtrend, but might be one to watch. I don't see a reason to buy it yet on Monday. I said the Crocs didn't look good. Anything else on here? Investment banking and brokerages. I looked at a lot of things this week, and none of these really jumped up to me as winners. Here's one, Nomura Holdings. From a chart perspective, it's had a big run up from 3 to 6. Everything is green. I guess that's a winner. I don't see any earnings per share growth. Pays a teeny-weeny dividend, high multiple, not too exciting. Piper Jaffray companies, well, you know, if you want to look for an attractive chart and something that's winning right now, I think we actually found one. I don't know anything about Piper Jaffray's. I guess Goldman Sachs must not be in this group. Security dealers, brokers, dealers, and flotation companies. I know it's been around a long time. But of all the patterns we've seen, my goodness, everything is green. The 8-day exponential is above the 17, which is above the 50, which is above the 200. Volume came in the stock. Nice uptrend. It's a turnaround stock. Not a big company. Revenue 500 or so a year. Makes money. Trades at a multiple of 21, much less than its growth rate. Don't know much about it, but of all the charts we've looked at on the long, I would say it's the most interesting one. So let me go down here to trading stock base for Monday, so I'm going to watch it on Monday. Duff and Phelps, making a nice move since the middle of November, a number of pocket pivots. Everything's turned green. Less earnings per share growth below the 200-day moving average. I'm a little bit less interested. I did have to admit, I liked the Piper Jaffray, and I wasn't expecting to when I saw the group type. Home entertainment and software, I don't know these. Group has been, as you can see, has been extremely strong. I mean, excuse me, extremely weak. Going back with what I said, these are sort of the junk off the bottom, while the leading stocks have been being sold off. Now it's made a nice saucer-shaped bottom. Failed at the 200. Try and get above the 200 again. Kahunas, pocket pivots. Everything's turned green. Doesn't make money. I like stocks that make money, although from a pattern perspective, if it can get above the 200-day moving average, it might be interesting. Let's look at force index down. Kind of interesting that automobile manufacturing makes it to the top of the list considering how strong Ford has been. And I think that some of these look like they're topping. Winnebago's had a very nice run. Huge earnings per share. I guess people are starting to be concerned that if we go into a recession with this fiscal cliff, that these are things that people are not going to be buying. Its volume was only a little bit above its average volume, 289,000, so it wasn't all driven by volume. But if we look at this, is this something you want to short? It's in a big super uptrend. Yes, near the top of its high jump bar. It's extended. Like I said, I'm not a big fan of shorting individual stocks. I'd rather buy contra ultras, which we'll look at before we're done. And that is the only one that was weaker than the index. You can see Tesla has already rolled over in this group. Thor Industries, which is similar to Winnebago, even though it came out with good earnings and good earnings projections, has sold off hard and failed at the 50s, likely to come down to the 200-day. So weakness in the group, but not necessarily in the top one there. Go back. Gold. Well, if you own much gold, you know gold has been weak. The weakest of the bunch is CDE, which has got silver in it as well. And you could see here it missed its earnings big time. Pulled down to the 200-day moving average, has been bouncing around behind it. Nothing here that exciting. Probably not the greatest stock to short right when you got the 200-day moving average right under. Newmont Mining, historically a leader when it comes to gold stocks, sold off hard. Rounded bottom here. You know, gold is going to depend on what the dollar does. American Barracks, you can look at all of these, have failed, and have had very difficult pullbacks. Royal Gold, I mean, if I wanted to go long a gold stock and I was looking for something that was at all constructive, at least this is above the 200-day moving average here, has bounced off several times, had a kahuna on Thursday, and has been a leader in gold. But I think gold has got too many macro influences on it. Casino and gaming. Again, these have had a rough time of it as well. Now, if I was looking to short a stock, because I thought we'd see some big weakness coming in, here's a stock that's failed multiple, Las Vegas Sands, multiple times at the 200-day moving average. So if this stock rallied up to the 200-day moving average on Monday because a deal was done, and I thought the market was going to roll over, shorting this at or around the 200-day moving average with a stop just a little bit above the 200-day moving average might not be a dangerous thing to do. And here's multimedia games where that 200-day moving average, which was support, perhaps now it's turning into resistance, and perhaps it's giving us, although it's a cheap stock, a potential shorting opportunity with no obvious support sitting anywhere close underneath. Perhaps down to here if it fills that gap. Back. Auto parts and equipment. Borg Warner, it's got a lot of green. It's in a very nice up move. We'll see if we can get above the 200-day moving average, one of the week, in this group. Take a look at the one that's at the top, TRW. Weak group, but a leader in a weak group above the 17-day moving average. Looks to me just like a little bit of a pullback here. It doesn't make a whole lot of money. So as I look at the force down, where I really use it for is to get a sense of what the market's doing and what things are not working, and the force up, what things are working. And you know what? I wasn't set on the right button here, so I was alphabetical. I should have thought about that when I saw automotive. So we'll look at a couple of other things here, other diversified financial services. As I've talked about before, big banks have tons of volume, so they roll over and they have huge force if they have a down day. So here was a gap down on Friday on the index. It's probably, you have to have it ranked the right way, which I wasn't doing, but that's okay. Change the index group. So Bank of America, which has been a superstar this year, as long as Ford, as you could see, had a pullback on Friday to the 8-day exponential. Not a whole lot of volume, but on a typical day, not a whole lot of volume. Our average is 130 million shares, and you can see that this group gets to the top of the bad list on force index whenever they have a down day, just because of their magnificent volume that they have here. Citi, and then the next one's going to be JP Morgan. So these are actually have done quite well and have led the market in December, especially Bank of America. Oil, gas exploration, changed index group. These have been weak of late. Just look at the price of gas. But interestingly, oil has been done very well. Chesapeake, which is mostly a gas play, time selling real estate, is pulled back a lot. Here's Devon. So here's a list. Anadarko looks like it's holding up a little bit better, but certainly a very weak group as well. Partly why I was surprised to see semiconductors manufacturing on the other list is because semis have been so weak, and we'll just take a look at Intel. And you can see Intel's been, and we actually talked about it back here as a short, has had just a horrible pullback, and now the 50-day moving average is being resistance. At some point, this becomes a value play, and it bounces, but it continues to be ugly. Pays a huge dividend, though, 4.4. Who would have ever thought? Intel with a dividend of 4.4%. So sorry about the confusion there, but it just demonstrates how important is the raw combo and how you can use these tools to find stocks that are strong and are weak. Other things that I do, one of the things I like to do is a group inclusion filter. And what I'll do is these are, the smart groups are some prepared lists that the program does every day that might be strong or weak depending on what the name of the list is and what the intention is. So here's a list of pocket pivots. And I have a filter on, so I'm filtering out scorecard no index, which tells me I'm filtering out stocks that are less than 5 and less than 150,000 shares. So these were the pocket pivots on Friday. And then there's a number of other pre-searches. So one thing I might say is these are lists of, some of these are the best stocks, that if my stock was in a lot of different lists, then it might be a really good stock. That's hypothetical. So let's take a look at that. Group inclusion report. And let's see pocket pivots. Best criteria, growth, high growth stocks, leaders, quarterly EPS acceleration, strong EPS. And let's just make a group report of the top, say 5, and we're going to call that group AAA Web Gems 1230, and it's going to tell me which stocks find themselves in the highest number of these lists. And I might be able to fish from some very strong stocks. So no index is necessary. So these are the ones that are in the highest number of the lists. So let's actually we'll do it a little differently today. Let's take all of them that made it into 4 lists or more. Let's copy it. Let's go into HGSI, into user groups. And let's just call it, so we'll put them in that way, but we could also just do this. Test web. I thought this was exciting. Paste list here. Okay, and these are the ones that made it into the list that I highlighted. If we go back to that list, started with soda, 1, 2, there must have been other stocks, 3, 4, 5, 6, 7. Let me try that again. I have an overlap on that. I'm going to figure out what I did wrong, and I'll go back on Tuesday. But what's really cool is the fact that you can now go into a user group, and all you have to do is find that. Paste list. And then you can, I don't know what I did with these that brought them in. So those were on a prior thing that I did. So, all right. So let's take a look then at just these stocks real quick. I'll look at my list and then we'll say good night. So these are the stocks that, from a more bottoms-up approach, are stocks that have the strength in the market. Let's just see very quickly if any of these look interesting. Here's 3D Systems, lower left, upper right, certainly getting loose up here, but it's a leader. It's pulled back almost to the 17 and bounced off. Makes money, trades at a multiple of about its earnings rate. Certainly is a leader in the market. It might be one to watch if we get some bullish movement. SodaStream had a nice takeoff in mid-November from its squeeze of its moving averages. I don't get this stock. It's got decent earnings per share growth. Twice the PE. This is make your own sodas at home tools, and perhaps it's something that will be more than just a fad. Aspen Technology is an older company. What a beautiful lower left, upper right. Gives you opportunities to buy it when it drops down to the 50-day, mostly turned green. Doesn't make much money, and that might be bothersome to some. But has some big earnings coming in the next few quarters, according to MarketSmith. This was one of my favorite stocks from my review today. Viewpoint Financial Group is riding run-up, a squeeze of the 8, 17, and the 50. Lower left to upper right makes some money. It's certainly one that made my list as well. Hovanian, we talked about this last week. Big run-up, sort of a high-type flag. It's going to run again. It has losses the next 2 quarters, but has some earnings coming in later. If home builders are strong, this continues to do well. I did a broader list today when I did my group inclusion filter. And the stocks 3D Systems, Fleet Corp, and I believe I saved these. And I went through those, and basically I'm just going to close. It's been about an hour. Sorry, it's been somewhat disjointed. I forgot to set my combo ranks, which not the first time. I've come up with a number of things that I will be looking at to buy on Monday if the market behaves, and I can't emphasize that enough. And what I do is I take these stocks that I'm interested in, and I basically, Eagle Materials, Aston we looked at, Stratasys is one of these 3D printing companies, Sylvanium we looked at. I have them in a watch list. I break that watch list into leaders that are extended or gone. These are the true leaders in the market, and there are still a lot of leaders. Breakouts with great earnings, that Magnet chip, which we looked at, which had great earnings per share growth, but was a small stock. Pullbacks ready to run. I'll show you what one of those looks like. Stewart is one that I guess if the housing market's going up, then there's going to have to be titling. So this is what a pullback ready to run looks like to me. Big run up, pull back to the 50. And what is this? It is a green, so the low of the day, 2461, was lower than the low of the prior day, and the stock closed up for the day. That's a green candle low. That is a reversal signal. So here's a stock that's pulled back to a major moving average and had a reversal signal, huge earnings per share growth. This is probably one that people were selling to take some of the gains. This is one that I think comes back next week. I have a title that I call Pullbacks Waiting for a Signal, and the CTRX is, what do you mean we're not, well, excuse me, my wife said something. So here's a stock that's had a very nice run up. This is 24. It's now at 48, and this is a little bit over a year to get there. But it's running into some stumbling right now. I know this stock well. It's a big position I own. And it's pulled back to the 200-day moving average. Now, the interesting thing is it's in a relatively tight range of about $6. So it's not really had a big pullback. But it's gone sideways. The moving averages have caught up. So I get excited here because my guess is that this 200-day moving average is going to be support. It's got earnings per share coming into the stock. It trades at a multiple of 47. If you look at the out years, the earnings continue to go up. And this is what I refer to as a pullback waiting for a signal. Still in an uptrend if I go back far enough, which is important to me for a pullback, and I'm waiting to see what it's going to do. Also on my list, I have another one. Regeneron is one that I like, but the question is, when will I like it more than I like it today? So it's on a pullback waiting for a signal. So here's Regeneron, and didn't quite make a green candle low, I think. But had a doji right on the 50-day moving average. If this opens up on Monday, great earnings per share growth, has been a leader. But I need to see that signal. I'd like to see a kahuna, a green candle low, big volume update are things that would get me interested on that one. And then back to, lastly, bottom fishing. These are stocks that I just want to get into in the hardest way because I know something about the company, but they're not growth stocks. They don't have a lot of green in them. But I'll look at two. I'll look at Dole. I'll look at these three, Dole, Teva, and CXO. And then I'll say goodnight. I'll almost say goodnight. I keep promising to say goodbye. Dole, run up, pull back, bounced, sort of being squeezed here. If it breaks above 11.8, which is a 50% move from here, I'd probably consider getting into this stock as it's got awesome earnings per share growth, a turnaround stock here, loss, now making more earnings, and a run from 11.5, 12 up to nearly 15 is a 20-25% run. So I'm kind of interested in Dole, but it's bottom fishing, and I'm not ready to buy it until it breaks above perhaps that 50-day moving average. I mentioned Teva. There's no chart reason to buy it except it's a great company that sold off hard. Don't know when it's going to turn around. On a weekly, you could see it's been sort of rough for quite some time. I know the company. They've made some acquisitions. They've got a nice generics line. What do I call that? Let's see. The low was 36.66. The low the day before was 36.75, so I got a green candle low, which could be a reversal signal, and one that I'm going to look at over the next couple of days. It's a whole different reason to buy it. It's not a growth stock right now. And then here's one I've been in and out of over the years, Concho Resources, and it's at that point where it always bounces. And a bounce up to 90 is a 20 to 30% return. No reason to buy this except its pattern is that it usually bounces from here. Again, that's why I call this category bottom fishing. Now, I've at times posted this list, and I will probably start to post it again after my session on Tuesday, and I have a good chance to explain to everybody what these mean, because they are not go out and buy everything now lists. They're things to watch based upon what the market might do. So I'm just going to end up by, a couple people ask, well, what do you do during the day? How do you watch that many stocks? Simple. This is Thinkorswim. And in Thinkorswim, I have built a number of scans. So one thing that I might want to do during the day is to look for, if I want to short, I might look for red candle highs. And I'll hit the scanner, and it'll scan the market, and these are the ones that made red candle highs. And I have some other things that are here that I look at as well to try and find things that I might want to work with or might want to go in and act on. Let's just take a look at EC. And let me open up a Ian chart. Well, don't even try and figure this stuff out. This is from Never Lost Trading. It's one of the tools that I use real time to help decide buying and selling. And let's go back to my scan and EC. And you could see the red candle high, the red high, and the red candle. These little things are MACD divergences as well. So it's just one of the things. So during the day, I'll be scanning for red candle highs and lows. I'll be looking for specific candle patterns. I'll be looking for stocks that failed at the 50-day moving average. So a number of different things that I do during the day to find things to buy and trade. Thinkorswim is one way of doing it. I've also programmed much of these things into, this is a dummy account, by the way, so yeah. But basically what I've done here is, let's see, what I can do during the day is scan using trade stations, the S&P 500, for stocks that have a green candle low. I can do a list of 5-day high average volume and price over $5. Again, some of the similar ones. You see Teva had its green candle low. I can look at I can look at red candle highs as potential shorting candidates, none in the S&P 500s, none in the stocks there. For those that know of David Elliott, I also can look at, let me just pull this down here. When I change my resolution to do my videos, things get all messed up. I can also scan during the day for Lobo breakouts, breakdowns, and squeezes. So there are a number of things that I do during the day that help me identify actionable events. And I take my buy lists and I put the same types of things in them. including earnings dates, so I don't get shocked there. And I watch them during the day for signals that may be time to buy. And then I do some auto trading where I might launch them into various programs. This is one here that plays off the opening range and some other trading things, and then auto trades during the day. So at this point, I think I've said a ton, probably too much with a few flubs I apologize for. If I go back to the beginning, what I wanted to accomplish today was to show how I use the market to figure out what it's doing. I use the force index to figure out what industries are working and not. I like to filter down to stocks. I showed you the group inclusion filter and the smart groups to find the best stocks. I looked at TradeStation, Thinkorswim. I actually did look at Magenta Trader. So I accomplished much of what I wanted to do. I'll spend more time on the contra ETFs on Tuesday as potential ways to play a falling market. And lastly, just to remind everybody, and I'll leave it on this for a few seconds as I say goodnight, I'll be doing a live webinar Tuesday evening. This will not be any more of a sales presentation than today's was, which was none of a sales, and I look forward to having you all join us. Hopefully, George will pay for more than 100 seats if we get a lot more than 100 people registered. And here it is, gotomeeting.com, register 529-767-698. I'm going to say good night and hang up. I'll leave this up for a few more seconds. Thank you all and have a great night. Good night, everyone.